Let's get technical here ahead of a couple interesting reports. First, we're going to take a look at chips with Lam Research down following Texas Instruments numbers. And I feel like that's weighing on them a little bit here this morning, Renita.
Definitely. Shares are falling for Lam Research this morning, but also expectations are low. Analysts expect from many of the major parts of Lam Research to have lower demand, except for the demand for customers that make power semiconductors for vehicles and for renewable energy. Those are expected to be a bright spot in this earnings report. Adjusted earnings are expected to fall year over year to $5.03 on revenue of $3.12 billion. Analysts are also expecting the operating profit to fall year over year. And the weak demand, the weak demand from consumers will also come from the fact that inventories have been piling up as well.
Yeah, this is not exactly a great setup into this. It sounds like the bar is indeed pretty low. And in line, though, with what we got from Texas Instruments, which was contracting top-line revenue. And also, it sounds like margins for Lam might be under a little bit of threat here. Definitely.
Those will be under threat. They're under pressure for sure.
Yeah, that's not good. Okay. Stock, though, I mean, hey, it's a chip maker, or at least supplier to them, so it's been doing well, Rick.
I mean, we've more than doubled off those yearly lows just below 300 here. And more recently, we had a big move upward here that has kind of slowed down a bit into a rising wedge type shape here. We established some highs. Our high close came in near 660.07. And looking at the volume profile, it was interesting because we have two clear nodes. We have a big node here and a smaller node up here, just maybe around 635 or so, and maybe like 620. So there's definitely some buyers even at these elevated levels. It suggests more conviction on the part of traders here that they're willing to take a stab at making trades at these higher prices here. Our moving averages are still trending upward. They're still diverging from apart from each other. But momentum has been slowing down. You can see that we've been kind of trending downward for a while here. And people tend to get a little skittish about this bearish divergence. It's not necessarily a head for the hills scenario. That price is going to fall when we get bearish divergence. It speaks to slowdown and prices kind of getting stuck a little bit, more consolidation really than anything. As you can see that we've just been kind of squeaking out these higher highs. So looking a little bit closer here now, to assess some support and resistance. As we said, 630, 640, there's nodes around these areas, 620 as well. But the high that we established over here, that's really what we'd want to beat for a new uptrend. We've got the upper boundary of our channel to look at as well, near maybe 657 or so. To the downside, we've got our 21-day EMA right here, near the 633 level. And the bottom part of our channel would be the next area to watch here. We never did fill this gap either. We established a gap between about 569 and 580. If things really start to fall off, that would be one area to keep your eye on as well. If I don't know how likely it would be to get to that point, but that was an area that caught my eye.
Really nice kind of ascending wedge or something.
Rising wedge.
Rising wedge that reflects that slowing of momentum that hasn't manifested itself in a major reversal just yet, but pretty well-defined levels here. We start getting below 620, 630-ish, then suddenly it looks like maybe that momentum slowing is turning into something a little bit more dramatic. Really a good chart, nice one ahead of earnings. Very different from Texas Instruments, which is super choppy, up at the highs. Lam Research kind of already breaking out and trending, so pressure's definitely on for Lam Research despite having some pretty low expectations. You mentioned that the autos part of their business is supposed to see growth. Switching over to O'Reilly, which has been one of the main key winners of the auto parts trade, Renita, but this sector has broken up a little bit over the last couple of quarters.
It has, and it's a reason why today it's hovering between gains and losses. It's because the outlook for this earnings print is pretty mixed. Now, analysts do expect adjusted earnings to grow year over year to $10.05 and revenue to be just under $4 billion. But this comes after a period where it was at least 9% organic growth in 8 of the past 12 quarters. And after this, analysts actually expect the company enter a period of lower same-store sales. And this is as those DIY projects fade people are not doing these things on their own anymore. Either the things are fixed already,
Yeah,
or
they
they're
got them all
paying,
fixed.
right, or they're paying somebody else to do it.
Or they're
because
ready
they
to
don't
buy a
have
new
time.
car instead.
Maybe, depending on the prices, right, relative to what they're looking for. But one thing O'Reilly said that they'll continue to watch is the operating margin. Analysts are watching that operating margin because the lower DIY projects could hit on the operating margin during that time.
Okay. So maybe a little bit of kind of cracks in this very strong bull thesis over the past couple of years. O'Reilly hasn't shown many sympathies in line with AutoZone, some of the others that have broken down. It's really kind of become its own beast in this sector, Rick.
Yeah, and you mentioned the last couple of years. I took this chart back even further than we usually do because you can see from that point of our 2-year lows near 563, that little white bubble on the screen there, pretty much has just been straight up from that point.
This is spring 2022.
Yeah,
back here.
Yep, all the way back there. So this is a longer chart here, and just following along these lows pretty well for such a longer term pattern here.
Amazing.
And what was interesting to me as well is that looking at an assessment of the volatility of the stock, I put a yearly standard deviation channel on here, and this is just looking at the past year of data. We're basically right near our linear regression line, our line of best fit based on closing prices. So really we're closer to a fair value than any kind of extreme price point here. So kind of right where we should be based on our own price history here. Nevertheless, we would still want to see a close beyond our best close, which oddly enough happened on a red day. It was a down day when we made our best close. The 969.23 mark was that spot of that red candle. So we're getting pretty close to that point here today. A good earnings could easily propel us beyond that point here. Okay. RSI, kind of in a triangular pattern here, kind of compressing. Not unusual at all heading into earnings. Price volatility decreases as there's this event risk that can happen. So, looking pretty good though, near the highs, near the point to beat here to the upside. If we do break above that point, +1 standard deviation channel is a bit of a lofty goal at 1040 there. Man. So, but that's what we have. That's what the technicals tell us right now. That could be a place to look for some potential resistance if this move really starts to take off. To the downside, 21-day EMA near about 953. Below that, our 63-day EMA near about 929.
Your sort of midterm moving average here lines pretty well with the bottom of the channel that has been moving higher, so nicely kind of assessed for the downside risk. The upside, I mean, look, anything's possible when every time this stock seems to consolidate and go sideways, it resolves higher. History is definitely on the side of O'Reilly here as opposed to some of the other peers. Like I always say, though, it's got the best jingle. O'Reilly. All right. Not doing the Barbie song, though. No chance.
No.
Let's talk Mattel here, Renita. I don't know what numbers this market is going to need to see from this company, but they've got to be enormous given how much they spent on this film and how much they've advertised it, how much it was talked about, the ticket sales. I mean, This has got to be a key quarter for them.
It could be a key quarter. However, a little sobriety is injected in there. An analyst at Stifel says that while this movie, it really just premiered less than a week ago. Remember that.
Right.
And while we will see some optimism and it'll be front loaded with commentary about Barbie, the reality is this company still has a lot of inventory issues that'll overhang during the second quarter. But that Barbie bump in related merchandise and ticket sales and everything else could happen in the second half of the year.
Okay, so guidance.
Exactly. Guidance may be stronger than expected. However, some analysts say guidance for Mattel may actually be conservative, and then you'll see a better breakout in that next quarter. But analysts are expecting an adjusted loss of 4 cents on revenue of $955.79 million. And today the company announced a management shuffle. The COO, Richard Dixon, is leaving as of August 3rd. He's going over to be CEO and president of The Gap.
Wow.
Right.
Clothing company.
A clothing company. Now, he's credited with
Amazing.
helping make over Barbie into the star that she is today.
Well, that's the thing is, do we know yet? I mean, let's see what the earnings are. We know that the ticket sales went well, but relative to the costs and all that, you know, is it going to move the needle for this company?
I think we'll definitely see expenses pipe up during this quarter for sure, but we don't know if the earnings will be relative, you know, will go up as well as the expenses will during the quarter.
And then even if it is a great success, the guy who's behind the idea is gone.
He is gone now. So what does it say about the future of the brand, the future of the whole Barbie franchise?
Right.
And this is a really interesting time to leave, by the way. After this movie broke out, you know, so we'll find out a little bit more in the company's projections for the next quarter and for the full year.
Okay. Chart-wise, Rick, a little bit of nerves kind of setting in ahead of the report, maybe?
A little bit, yeah. We're down about 1.4% or so on the day here. And really, we've had a nice recovery off the lows, though, just above the $15 mark. We're up about 36% from that point. We established an upward channel here that we bounced around in between for a while, but we broke above it. We broke above all three of our moving averages, our volume profile point of control. We established a node just above the 21 level according to our volume profile study. But then we failed at the $22 mark. That was the site of this red dashed line here. That's where we had this gap back here. And it was a small gap, but I had been keeping an eye on it for a while because we never quite filled it. Since then, we did make our way above it very briefly here, but we weren't able to really take it out. And RSI was very odd at the same time here because we were seeing that it was in the overbought area. At the same time, we were failing at resistance and forming red candles that were getting rejected from these elevated levels. So it's always more important to follow price. The indicator is secondary to the price action here. That was not good price action that you'd want to see for a stock that's encountering some resistance like that. Looking at our chart a little more closely here, we can see that we have, like I said, the $22 mark to the upside. To the downside, we've got our yellow 21-day EMA right near the 2061 mark. And I wanted to show something real quick here as well, too. Makes me wonder if we could be seeing a cup and handle type pattern here. We've got this long kind of basing action here. We came up to the resistance. We've had the pullback. The next step would be to take out that initial $22 level, forming like a coffee cup type shape.
All right. I like that. Always love the cup and handle. Love doing that.
It's a very dramatic pattern to draw.
Yeah, so jealous you get to draw that. All right, thanks. So Barbie innovator, CEO, gone to Gap. A chart under some pressure, but some potential if the earnings live up to expectations. I'm ready to see what movie he makes at the Gap. Do we get a Kanye documentary or something like that?